So first of all, thank you, 10 Table folks, for having me. Appreciate everybody hopping on the live today. I know everybody's busy, but we'll try to keep it short and sweet. I know this is kind of supposed to be a webinar setup, but if you have any questions, I'm sure you can type them into the chat, and we'll try to address them as they come up. We're going to basically go through a few things about insurance and safety tips for party equipment rental businesses. This is as of today of February 24th of 2021, subject to change, obviously. Things in the insurance industry seem to change every year, if not monthly, seems like. So this is geared more towards the party equipment rental businesses, but it could also be applied to a family entertainment center. Some of the principles are very much the same. So without further ado, I'll go ahead and get into it. So this is our company name, the Cossio Insurance Agency. Most people know us by the CIA. So if you guys have any questions or just looking to get some more information, whether it's about the party rental companies or the family entertainment centers, it's all listed on our website. We actually have a widget that you can go to get a quick chat going or get a quick estimate from the website. We're very responsive there as well. But just some backstory on the company. We were started in 1984 by my father, Larry Cossio, but we were recently acquired by Brown & Brown of South Carolina back in 2019. So it's a great thing. We're part of the fifth largest insurance broker in the United States. So we have us, basically more market leverage. So not only with your specialty insurance, like your business for the party rentals, but if you had questions about your personal insurance, like homeowners, auto, anything like that, and we have other specialists that are available that we can definitely point you to. So don't think we're just limited to your business insurance. We can definitely find you solutions elsewhere. But again, if you have any questions, just give us a call or visit our website. We'd be happy to help you out. So this is more information about myself. So most of you were used to my dad Larry doing these particular presentations. So as I was telling Matt, I started with the business as long as I can remember as a kid. Started out doing data entry, filing documents back when we used to have a big file cabinet room, and doing the mass mailers after school. So just been heavily involved since birth, essentially. But from the insurance standpoint, I started off writing paintball and airsoft fields just because that was what I was used to writing. I started playing paintball when I was 5 years old, so it was kind of a natural fit for me. But then when we started focusing more heavily on these party equipment rental companies, transitioned to doing that. I want to say it was about 2012, 2011, right around that time. So I've been a licensed insurance agent for both property and casualty as well as life and health since 2012. So definitely been around the game. Graduated from the University of South Carolina, go Gamecocks. Had a double major in marketing and insurance and risk management, graduating in 2013. And then right afterwards, I went right back to work for my dad's company. I was there for about 3.5 years. Said, hey, I want to spread my wings a little bit. I want to see the country a little bit more. So I took a traveling outside sales job for an A&H carrier. Learned how to fill gaps in coverage with accident policies, especially as it pertained to a liability policy. So I'm definitely going to spend a lot of time talking about that, just because that expertise has definitely helped me in the future and with the current policies that we sell now. So came back in 2020 of last year, back for round two, since my dad, he officially retired in October. So I'm happy to be back, hoping to implement some changes that will kind of drive us into the future. So hopefully if you guys have seen any changes, hopefully it's for the better, not for the worse. And we're looking forward to serving you. So today's agenda, I'm just going to go through a few things. First, just some simple, repeatable practices to help you lower your risk. Then getting into some causes of incidents. We're going to focus mostly on slides today, just because it's very popular, and as we get into the warmer seasons, you'll definitely be seeing those rentals going out more. The third thing, insurance policies that you should have and why. And then number 4, some frequently asked questions. I had 3 of them on there, but we'll try to get to some more of the Q&As as well. So let's go ahead and get into it. All right, so some tips to minimize your exposure. Number 1 on the list, you need to train your employees on every single unit. Don't have them go set up a piece of equipment that they've never operated before. Get the manufacturer to train them if you can. I know that a lot of them are available to provide training on their units, on the equipment that they make. But then also having that training documented. You want to make sure that you have that documentation on file, so that way if, God forbid, you get into a lawsuit, they say, hey, do you have any training for your employees? And you say, yes. Well, you say, okay, well, can you show me? But if you don't have any documentation, it's very very difficult to prove that you've done any of those things. So just make sure that you get the training on every single unit, and also train your renters as well. So the safety guidelines are the next thing here. Make sure you follow them every single time. If it says that you're not supposed to set up a bounce house on an uneven surface, or a table and chair on an uneven surface, don't do it. Don't give in to the customer saying, oh, well, hey, we'll give you an extra $50 or $100. Don't do it. It's not worth the risk. You want to make sure that you're following those safety guidelines every single time. And going hand in hand with that, explaining the safety rules on how the equipment is supposed to be operated, making sure that you spend a ton of time going through that. Don't rush through that process. The next thing on here is to also get the renter to sign off on those safety rules. So, if they say, hey, don't do any backflips, don't have the units overloaded, no adults and children using the equipment at the same time, you need to make sure that they're acknowledging on your rental agreement or on your rule set, each section have a different breakdown, and have those safety rules for every type of equipment that's at the event. So, if you have bounce houses there, if you have tables and chairs there, explaining that, hey, you can't use this table as a ladder or a scaffold, you shouldn't be standing on it. Same thing with the chairs, like don't lean back in them. You got to keep all 4 feet on it. Don't use those as a ladder to step onto something. You need to make sure that that's outlined. A lot of people forget about the tables and chairs aspect of things. The next thing here is just to make sure that you have your rental agreement and that it has the hold harmless wording. So normally, even to get a quote to begin with, you have to have that hold harmless wording in the rental agreement in your waiver. And then the next key thing here is that it must be signed. So if you have rental software like ERS or Inflatable Office or Bouncy Castle Network, that will eliminate some of that potential exposure to not getting that signed agreement. Just keep in mind that that waiver is what is going to be the leg for you to stand on if you do get into a lawsuit. So if you don't have it signed, it's going to be very difficult for your insurance company to defend you. So make sure you get it signed. Invest in that software so that we eliminate some of that human error, and you should eliminate some of your issues there. Next one on here, take pictures, before and after your setup. So if you have the pictures in hand, it has a date and timestamp on it. That way, if say you set up your slide on a grassy area, it's near a pool, but it's not next to the pool, and then you go back to pick up your unit and it's been moved. We've had instances where people will just, they take the stakes out and they move it somewhere else. So if there was an injury, that's one of the things that you would definitely want to document is like, hey, we set this up correctly. We have a picture showing that we did it, and we came back and it had been moved somewhere else. So it'll definitely help you out. Just do it before and after. It's easy documentation. You could do it from your phone. Set up a system with your drivers or your employees to make sure that they follow that process. It'll definitely help you out. So the other thing here, what's been a common topic here, is getting the renter to identify those utility and sprinkler lines. You don't want to drive a stake through somebody's lines. You may have it in your rental agreement stating that you're not responsible for it, but again, people sue for everything and anything these days. So just because you have it in the contract does not mean that they cannot file a lawsuit against you. So just get rid of that headache to begin with, and just get your renter to identify those sprinkler lines. Dial 9 or 811 so that way they can get out there and mark them for you. All right, so as far as the devices with the most claims, we get a lot of questions about people. They're like, hey, which unit should I stay away from to keep my premium down? This is the list. So, jousting, as you can imagine, you're hitting each other with a pillow padded pole, essentially. So, if you knock off their helmets, potentially they could get hit in the head again, just by nature. I mean, that's going to be something that's going to have a higher risk to it. The knocker balls, I'm sure people have heard about the horror stories of people getting injured by them. A lot of times it had to do with knockoff equipment. But the biggest thing there was that the game was designed to be bubble soccer. They're supposed to be playing a game, not just beating the heck out of each other. But of course, you get some testosterone-filled men. They're out there. They're just trying to knock each other over, and that's when you got some pretty significant brain neck injuries. So if you're looking to keep your premium down, I would stay away from that particular unit as well. Sumo suits, kind of same line as jousting. You're trying to essentially knock each other over. So you get a bunch of injuries from people that are falling over, not able to brace themselves, or they're getting hit in the mouth, so knocking out teeth. So things of that nature. Slides, believe it or not, yes, there's a ton of claims on slides, whether they're wet or dry. It has more so to do with the operation of it and the enforcement of the safety guidelines. So on the next slide, you'll see we have an example of what we're talking about, but most likely it's because they're not doing the one up, one down rule. You don't want to have a bunch of people that are on the ladder going up, but also you want to make sure that there's only one person going down the slide at one time. Mechanical bulls almost always comes down to the operator. So a lot of the insurance companies these days are saying, hey, look, unless you have at least 2 or 3 years of experience, we're not going to write it for you. So, the mechanical bulls, it's completely 100% on the operator. So if they get goaded into, hey, is this all you got? You can't throw me off this thing. Once you really start trying to throw somebody off of it, that's when those injuries really start to pick up. So definitely want to avoid those if you're trying to keep the premium down as well. Trackless trains, more of an issue with the homemade types of devices. So you're seeing that the carriers don't want to write just like a water barrel that's been converted into a trackless train. There are great manufacturers out there that make very safe units. So just, if you guys are looking into trackless trains, it's not the worst thing in the world. Just make sure that you're getting it from a reputable manufacturer. So I'll go to the other one with the slide here to see what we're talking about. Oh, I went too far. Sorry about that. Oh. Every time I see that, it just makes my stomach turn a little bit. So as you can see, there was a bunch of issues there. One, you had an adult going up the slide, and they had kids on it as well, but you also had like 5 or 6 kids that were going up the ladder at the same time. So as you can see, it was like a domino effect. The one at the top fell down, slid down, took out every single kid that was on there. So if you have a per occurrence policy, it's going to be for that one claim. No matter how many kids were involved in it. But if your policy has a per claim deductible, that's another thing you need to make sure as you're looking at your policies. If you had a per claim deductible, that deductible is paid out per person filing the claim. So if that would have been 5 or 6 different kids filing that claim, say you have $1,000 deductible per claim, you're looking at $5,000 or $6,000 out of your own pocket just because they bought a claim against you. So definitely want to make sure that you're enforcing those rules on the slides just because of that one factor. That kind of goes hand in hand with this one here is the people that, they allow their renters, or they're in an inflatable FEC. You maybe have a kid that's, they're kind of scared to go down the ride by themselves. So the parents, being the great parents that they are, they want their kids to have a great time. So they go up the slide and they usually put them in their laps, or they hold on to them like you can see here. And the issue with doing that, as you can see, even on this one on the top right, you see how his leg is kind of sticking out to the side? What ends up happening is their arms or their legs get stuck in that side baffle right there, and the weight of the parent is actually what ends up breaking their own kid's arm or their own legs. So our rule of thumb is that, yes, if they're not big enough, they're not brave enough to go down the slide on their own, do not allow a parent or an adult to go up there and basically hold on to them and go down the slide, because yes, you will have injuries, you will have claims because of it. In bottom left here, there's basically just horseplay going on an obstacle course. They need to climb up it, go down the other side. If they're holding on to it like this, you're going to have kids that are going to fall on top of each other, talking about broken bones, teeth getting knocked out, stitches. That type of stuff happens when you have a bunch of kids just using it that way. And then bottom right here, you just see, again, overloading. They're not enforcing the one up, one down type of rule. You don't want to have a line of kids like that, because, again, if you have the one at the top slips and falls, it's going to wipe out everybody else that's underneath him or her. So the number one question that I get all the time, whether it's somebody who's brand new or they've been in the game for quite some time, is which insurance policies do I need? So, it's a very common question. I just need to get liability insurance. Okay, well, what kind of liability we're talking about here? So on the left-hand side, you'll see that's the core 2 policies that if you get them, they kind of come as a package deal. So the general liability policy is there if, God forbid, you get an injury and they file a lawsuit against you alleging negligence in some way for any type of bodily injury or property damage. So, that's the policy that you're going to need if you are trying to set up at a school or a park and they ask to be named as an additional insured on your policy. That's the policy that would go towards. But the participant accident policy, I'm telling you guys, this is not just my experience as the accident guy, but that's your best friend. to be honest with you. That's the first line of defense that you have if somebody gets injured. It's no fault coverage. You want to be proactive with using that policy. The minimum premium is only $350. So usually what you want to have happen is you go to set up at an event, you go to pick up the event or the unit after the event. So you ask the renter, hey, how'd it go? Did everything go well? They say, oh yeah, it went great, but the birthday boy broke his arm in the bounce house. He had to go to the ER. Oh, I am so sorry that happened. That's horrible. We have an accident policy that you can use. It'll pay for the out-of-pocket medical costs. So what that means is that if they have primary health insurance, that accident policy is going to pay above and beyond that. So any of the out-of-pocket costs that they may have. So whether that's the deductible. So a lot of the high deductible healthcare plans these days, you're talking about $5,000 or $10,000 deductible. That'll take care of that. Any of the co-pays they may have, and in addition, the percentage of that bill that's not covered by their primary health insurance. The other kicker to that policy is if they're uninsured, which happens a lot. You can talk about California, Texas, Florida, even New York. That accident policy essentially becomes their primary health insurance up to $25,000. So it's a huge way to help prevent somebody from getting backed into a corner because of medical bills, and then they feel like their only way to get that money back, they see one of these billboards on the side of the road says, hey, were you injured? We'll get you the maximum settlement possible. At that point, it becomes a general liability claim. So again, if you're talking about trying to keep your premiums as low as possible, we'll get into it on the next slide, but having claims will drastically impact your premiums, especially when it comes to a general liability policy. So where the minimum might be $1,300, $1,500, if you have claims, you're probably going to be looking at like $7,500, $10,000 for your liability insurance moving forward. So use the participant accident policy. That is what it's there for. You're not admitting guilt in any way, but you're basically trying to keep somebody from feeling like their only option is to sue you under that liability policy. So other policy that you should consider or that you probably need, being in a digital world, everybody's working remotely. You have a website, you're probably processing credit cards. So you need a cyber liability policy. And the cost is so minimal that you would be kicking yourself if you have any type of an incident. These cyber criminals that are out there, they're starting to target more of these small to mid-sized businesses because you don't have sophisticated training. You might not even have great cybersecurity to protect yourself. So they see that as low-hanging fruit. So it could be a ransomware attack, which is what happened to us in 2019. We had somebody that was on our office, an employee that opened up an email attachment and infected the entire server. So that particular event, they locked us out of our system for about 2 or 3 weeks during one of our busiest months, and it cost us a ton of money. It was a huge interruption to our business. They wanted like $100,000, $200,000 as far as a ransom to let it back into our system. Luckily, we had a cyber liability policy, and they were able to negotiate that down. Also had to basically recreate our entire system because everything was infected. So that's part of that cyber liability policy. They give you that cyber security as well as the insurance itself. But the biggest thing as well is like they handle it from A to Z. So if you had an incident like that, just ask yourself, like, who would I call? They're going to ask to be paid in Bitcoin. How many of you guys have Bitcoin right now? There's a lot of those back end factors that a lot of people don't necessarily think about. And again, for the cost, it's a minimum premium of about $150. It's a no-brainer. It helps protect you from that ransomware stuff. So if something in an email or a scam, they have benefits there for that. So if you guys have questions about that one, it's very quick to get a quote. It might take less than 10 minutes. Commercial auto. So a lot of you think that your personal auto policy covers you for the business. It does not. So if you get into an accident on the way to or from one of these jobs, they see the bounce houses in the back of the truck or in your trailer. They're going to say, hey, what are you doing? Where are you headed? I was like, oh, run this bounce house company. Your personal auto policy could deny that claim because they don't cover commercial use, and commercial use includes pickups and deliveries. So if you guys have that exposure, you definitely want to make sure that you're getting that covered under commercial auto policy. Minimum premiums usually around $1,000 for the year. Just depends on the limits that you get. But you can also add hired and non-owned auto to that particular coverage. You want to make sure that you're covering your trailers as well. So just guys, consider that. That's something that you definitely need to have, especially because of the business that you're in. So just reach out if you have any questions about that as well. The inland marine policy, that is the property coverage on your equipment. So, the general liability policy covers bodily injury and property damage, but that's other people's property. So if you wanted to cover your own property, if it's, like I said, burns in a fire, it falls off your truck in transit to the event, or if somebody steals it or vandalizes it while it's set up at your event, that's going to be an inland marine quote. So, if you have a fixed location like a family entertainment center, you're probably going to have just like regular property policy because that equipment doesn't leave. But if you have both an FEC and a rental operation, you need to have a property policy for those units that are at the location, but then an inland marine policy for those units that leave your site. Next one on here is workers' compensation, which generally just applies to folks that have employees. But sometimes some states may require that you even cover the owners and executives under that policy as well. So that's going to pay for bodily injury, a death, but also lost wages. So it's a huge component to a workers' compensation policy. Again, state minimums usually, $500 to $1,000 normally. Just depends on how many employees you have and what their payroll is. These two other ones, I have them as blue, is kind of like a recommended. The business travel accident policy, obviously we're going to be doing a ton of travel in the party rental world. This is kind of seen as an employee benefit. So you can cover not only your owners and executives, but also your full-time employees, your part-time employees, and then 1099 subcontractors if you have those as well. So the big core benefit there is the accidental death and dismemberment, also known as AD&D coverage. But you also get other benefits like emergency evacuation. You get reimbursement benefits. If, say that person has to ride in an ambulance, or if they have to go to the emergency room, they just get a flat reimbursement benefit for it. But it just goes above and beyond maybe filling some of those gaps that are in a workers' compensation policy. For example, a 1099 subcontractor not going to have any benefits under workers' compensation because they're seen as a subcontractor, not as an employee. So if you're just trying to give your people some sort of a benefit, like I said, the death benefit alone would definitely go a long way for these people. Minimum premium there starts at $1,000 for the year. The next one here, EPLI. That is Employment Practices Liability Insurance. So that has a bunch of different benefits to it, or what it responds to, but it's sexual harassment. Could be that somebody feels that you fired them without cause, or they feel like you terminated them for any reason, or you didn't promote them when they felt that they should have been promoted. It also protects you against people who are not your employees. So say somebody who did not get a job and they feel like you discriminated them in some way. That is going to be an EPLI claim. So again, minimum premium is generally pretty low, but definitely something that you should consider if you're looking at getting some other additional policies for the business. So frequently asked questions. This is number one here. Why does my insurance cost keep going up even if I do not have any claims? So the biggest issue or the biggest driver there is going to be market availability. So typically, we call this the hardening and softening of the market. It's just a cycle. It's usually every 5 to 10 years. So you'll see that a soft market is generally that there's a bunch of carriers available, and because of that, they're competing more so on price. So it drives the cost of the premiums down for you. But eventually, once it bottoms out, you'll find that the carriers are essentially not charging enough premium to cover the losses that they may sustain. So we've seen that happen quite a bit in the last 5 to 10 years. I'm sure you've seen different carriers come and go. It's usually because they weren't charging enough. So you may think you're getting a great deal, but more than likely, if they have one, catastrophic loss, something that pays out policy limits, which could be easily $1 million or more dollars, the average premium is normally only about $3,000 to $4,000 for this industry. So you think about how many policies would have to be written in order to cover that loss, and a lot of times you get companies that just say, "Hey, we're just gonna wipe our hands of this. We're not writing inflatables or any type of party equipment rental business whatsoever." So it's happened quite a bit, and you're seeing that happen right now, where it's a harder market. Very difficult to find a carrier, especially in the admitted world, where they'll write it, where it's in a program, and we're like one of the last few programs that are left. So it's even harder to find excess limits. So if you're, say you're operating in New York City, you need to have $5 million per occurrence. It's becoming very difficult to find those higher policies or an excess policy for you. Used to be only like $2,500 per million in additional coverage. Now it's more like $7,500, $10,000, maybe even $15,000 for an additional $1 million in coverage. So the premiums are definitely starting to go up in that regard. The other thing is that insurance is a pooling agreement. So everybody is impacted by claims no matter what. You might be, for example, in Florida, There was a ton of claims paid out in Florida, so a lot of the folks that were paying a low rate, they all of a sudden are paying double, and that was not their own fault. It was just other people that are in the state of Florida that caused those claims. So, unfortunately, that's how it works. So, they have to pull all these risks together. Again, it's a very small industry, so they look at it with a lot of scrutiny. So if they get a lot of claims, they're more than likely going to raise rates somewhere else. So we saw that with Nationwide this past year with all the wildfires and things that they sustained out in the West Coast, Texas, all the natural disasters. And Nationwide obviously writes a lot of homeowners insurance. They write a lot of that property insurance for the businesses out there as well, for the vineyards. So they took a beating. They took it in the teeth. So they basically said, hey, we're not going to write any more of these amusement risks. And they're just basically not renewing everybody. So, insurance is, you got to see it as a group thing. It's not just on you, but obviously the best thing you can do for your particular loss runs is to not have a claim. So the next one on here, if I file a participant accident claim, am I admitting guilt in any way? And will that make my policy on the liability side more expensive? And the answer is no. You're not admitting guilt in any way by offering them the accident policy. That's the whole point of it. It's an accident. It's not a liability claim where they have to prove that you were negligent in some way. So it doesn't affect your liability policy because it is a totally separate standalone policy with its own loss history. So you can file as many accident claims as you want throughout the year, and it's not going to impact your liability rates whatsoever, unless obviously they file a lawsuit against you and that becomes a liability claim. So use the accident policy, guys. It's your best friend. Again, if you have any questions about how to file a claim on that, just feel free to reach out. Again, you want to be proactive with the claims. You don't want to get into a staring contest with the renter because they signed a waiver, and you say, hey, look, you signed a waiver. That's not on me. A lot of times people will react more favorably if you're trying to help them out versus just waiting and trying to hide behind that waiver. So just keep that in mind as you guys move forward. Even if you don't have an accident policy or you're not one of our customers, we can still get you that accident policy as a standalone. You don't have to write the liability with us if you don't need to. Next one on here, the vehicles we use for the business are not owned by the company. The example, an employee using their own truck and trailer to make a delivery. Do I still need commercial auto? And the answer is, at a minimum, you need to have hired non-owned auto coverage. That's typically something that's added to a commercial auto policy, or in some of our programs, we actually have the ability to add that coverage as an endorsement to the general liability. So normally that's a flat premium, usually about $500 or so. But still, again, if you have any of the vehicles are owned by the company or they're in the company name, you need to make sure that you have a commercial auto policy. Again, you guys definitely need that to definitely operate the correct way. So with that, do you have any questions? I have my email address right here, as well as our main phone line. If you have any questions, I'm happy to address them for you. We have a chat widget on our website, so if you guys just want to ask a quick question, you don't want to go through the whole email rigmarole, we have the ability to respond back, and it'll be everything through text message. So I'm happy to address that for you. So
All right, so we had one question pop in so far, and that's that if a vehicle is not owned by the business and it's like more getting commercial auto, do they need to list the business policy?
Is not owned. Wait, so the vehicle is not owned by the business, and I'm getting commercial auto. Do I need to list the business on the policy or just me? So you name the business as the policy owner. So if it's I don't know, if you're a sole proprietor, you would just be your name, first name, last name, doing business as X. But you would basically, if the vehicle is not owned by the company, you would name or get an endorsement on that commercial auto policy for hired non-owned auto. So if the company owns the vehicle, you need commercial auto. If it's something that is just a hired non-owned auto, you can usually get a standalone policy for that, but usually just easier to get it through the commercial auto policy because that's what it's set up to be anyways. I hope that answers your question. Do you have any other ones coming through?
I have not seen any more come so far. I guess to give people some time, one question I'd ask you is because you talked about the participant accident.
Mm-hmm.
If there was an injury to happen, but the person that rented was to say, "Oh, this is our fault. We're not gonna do anything with it. We'll take care of it ourselves." Would you just suggest anyway for the rental company if they had that to bring that up. And
Absolutely.
yeah,
Absolutely. You look like a superhero. If you offer to help take care of any of those out of pockets, I mean, imagine if that was you. If somebody said, "Hey, look, we can help you with that out of pocket cost," I mean, they're going to refer you to everybody. And having that accident claim again doesn't impact your liability whatsoever. The minimum premium is $350. The average claim that we pay out for an accident claim is normally like $2,700. So it's very minimal as far as the cost goes. So, do that for your customers. They'll definitely refer you to other people. They'll recommend you like crazy, just saying, "Hey, look, they helped me out. They didn't try to just put it all on me." Um, Basically, that participant accident policy kind of helps to alleviate some of that pressure too. That you have to offer something. A lot of people would offer cash, just like, "Hey, we don't want to have this to be an issue, so they just kind of want to make it go away." But this way, with the participant accident policy, you also ensure that they go to the doctor. As one of the caveats on the accident policy is that they have to go incur that first medical expense within 90 days of the accident. So again, a lot of times what ends up happening is you get people that get hurt. They don't let you know about it right away. And they come back a year later and say, "Hey, look, we got injured on this bounce house. We have $20,000 worth of medical bills now. We need you guys to do something about this." And at that point, you're past the 90 days. You can't use the accident policy anymore. Now you're looking at a liability claim, and that's what we're trying to avoid altogether. So again, be proactive with it. Ask them if there was any type of any issues. You don't have to say, "Hey, did anybody get hurt?" But just ask them how it went. Ask them if there's any concerns or any issues that came up during the event as well. So that way, at that point, hey, look, we need to go ahead and offer them the accident policy. Whether they want to fill out the claim form or not, that's on them. But at least do that to make sure that you're showing some sort of a goodwill with the customer.
thank you.
hmm
So we had asked, how would dunk tanks and affect the insurance cost?
So dunk tanks, they're seen more as I guess, a higher risk item. There are some limitations as far as like what people can be in the unit. So we want to have adults, obviously no minors that are getting dunked. They're not the worst thing in the world. It's not like it's a mechanical bull where a lot of the carriers will just charge like a flat amount of like $5,000 to add it. But typically a dunk tank is probably going to be charged at a higher rate than a typical bounce house or a table and chair for that matter.
And then we also have, what is the biggest risk in running your business underinsured or even, God forbid, uninsured?
Oh, so being underinsured, I'll tackle that one first, especially when it comes to your inland marine policy or your property policy on your equipment. I had a very good conversation with somebody a couple weeks ago, actually, about insuring the total value of her equipment. So normally on any type of property policy, whether even if it's your homeowner's insurance, there's some sort of a co-insurance clause saying that in order for you to have 100% coverage, you have to have the value of the equipment insured for at least 80%. So easy math, if the unit is worth $1,000, you can insure it for $800 or have an $800 limit on it, and if it's destroyed, they'd give you the full $1,000. But say you only had it insured for $700 because you're trying to save on the premiums, and you have a claim, they're going to take that formula and say, "Okay, well, look, you were supposed to have 800, but you only insured it for 700, so they do 700 divided by 800, whatever that percentage is, that's what they're going to multiply the claim by. So they're not going to pay you the full amount of the claim. They're going to pay a percentage of that claim. So it definitely hurts you. So if you consider the inland marine or the property insurance, I always look at that as, what if it was a total loss? Your entire inventory burns up in a warehouse fire. If you didn't insure the total value correctly, you're not going to get everything replaced the way you need to. So, highly recommend that you guys look at that. Don't try to, especially if the policy is a replacement cost policy, make sure that you do it at least 80% of the value so that we can get the full replacement cost value. Being uninsured, oh man, you're talking about potentially paying all of this out of your own pocket. And the biggest thing about your liability insurance is that if you are sued, you're getting the defense cost covered. You're not having to pay to defend yourself with an attorney. So that's a huge cost, as you can imagine. Just getting an attorney, going into the investigation, it's going to be a long, drawn-out process. It's not like it happens overnight. So that could potentially be a business killer. And so for you folks that are operating as a sole proprietorship or a partnership, and it's not set up as an LLC or some other type of a corporation, so you can separate that liability, they can come after your personal assets. They can come after your house, your retirement, your vehicles. They come after everything. So if you guys don't have insurance, just keep that in mind. That's the risk you're running. So, highly recommend that you get the insurance. I know it's definitely an additional cost, but in the long run, you do not want to be, footing the bill for a potential huge liability claim, and you didn't have any insurance in place. So definitely recommend you guys get the insurance going. And also a lot of the state, the schools, any of those public entities, they're not going to let you operate in those spaces if you don't have insurance. So if you guys are looking to, I guess get some of those larger jobs, the larger opportunities, they won't even consider you if you don't have insurance. So, another thing to think about if you're trying to grow your business as well.
Awesome, thank you.
Hmm.
So I know we don't have any more questions showing up now, but we have your email and phone number up there. So I'm sure, as you said, you could take any further questions after this live is over.
Absolutely.
All right.
Yeah.
Yeah,
Well,
I mean,
thank you.
unless you had any final thoughts that you wanted to throw out, I assume this is probably where we can end it.
Yeah, no, that's great. Again, I appreciate you guys having me. If you have any questions or you need some more further information, you just want to kick the tires on what we can do for you. Again, just shoot me an email. Reach out to the with the phone number or through that chat widget on the website, and we're happy to address those questions for you.